screen. Can you see my Word document?
Yes.
All right, thank you. I don't know why it doesn't have the red lines. All right, so you've got your own copy open as well.
Yes.
Great. I think I'll need to have my phone open to see the chats. Yes. All right, so let's go. So as I was saying, the objective will then be to do what? The objective will then be to be masters of this what? Of this company, experts in it. So the first email came through to say that, so it's from Ryan. It was sent to you on the 1st of November, so just about a month before the date of the assessment. It is sent to you as the financial manager, and someone called Denise is then what? Is then being CC'd, and the subject is welcome. So standard from what we've seen before. So let's get into it. And to the previous question is that sometimes there may be triggers. And when we talk about triggers, these are essentially, as you will know very well, these are then those pieces of information that will require a bit more work from us, that will require for us to do something more than what has been given here. So we are told, welcome on your first day at this A school. One of the key things that one always needs to identify is that we are dealing with an unlisted company, or in this case, a private company. So we've got a private company, meaning that one, there are no JSE listing requirements to think about. If they're to comply maybe with the King 4, it might be by election. They don't need to prepare integrated reports and so on and so on. Some of the things that we'll generally expect from listed companies, private companies are not required or expected to do. So that is always comforting. We generally refer to our companies by their shortened names. We are very excited to have you join the finance team. Typical, you will be reporting to me and will be responsible for preparing monthly management accounts, compiling budgets, overseeing the recording of transactions in general ledger, and you will also have a team of 4 to assist you. So this again is what one will then always wonder, why are you telling me to this level of detail? Because as I was saying, they want you to own the role. You really need to own the role. And at this particular point, it could also be a setting to say that if there is a team of 4 to assist you, it might be that in some cases, they could be what? They could be tasks that are done by someone else, and you might be required to approve them, to review them. So that could be just setting the scene. And also, you are told what you are specifically going to be responsible for. You are responsible for preparing monthly management accounts. And remember, management accounts are used for decision making. So there could be some decisions that are to be made, and you may then be required to provide certain information or to review certain information in that regard, to compile budgets and overseeing the recording of transactions. A was started in 2010 by Denise. So they introduced the first character, in addition to the person sending you the email, who had a vision of delivering world-class private schooling at lower fees. So now we are coming to understand what this business is all about. So we have known that they just told us it's A schools, but now they've clarified that it's all about world-class private schooling at lower fees. So in that diagram I showed you, they are now telling you elements of the entity's business model. So the key takeaway here is that one, when they talk about world-class, it means things like quality might be important. And you might then need to think about what is quality in the context of a private school. When someone says that this school is better than the other one, what are those elements? That's what I'll probably need to start thinking about. So it's private schools. Private schools, now I start thinking about some of the big names in the South African space. I start thinking about the likes of what? So maybe as we go, let me just make triggers or things to think about. So one, I'm saying that world class could be an issue about what? Quality education or offering. Then number two, it's a private school, and I'm thinking about the local space. That what or who are some of those competitors, and what comes to mind when I think about them. Then lower fees. Now they're telling me that if I'm to compare, they could be the premium schools, private schools, the ones that I think some of the names that come to mind will be the likes of Rodin, the likes of your Conway, Trinity, and so on, which charge north of say 70,000 per annum from grade R kind of setup, your Redem Hill, and so on. But they're saying, or maybe at this point, we might be thinking they are not there. They are saying that their objective or their plan is to deliver this at lower fees. So lower fees, will then need to think about who or which other schools are in that bracket. Then some of those other private schools will charge very high annual tuition fees. I joined Denise in mid-2010 to assist in rolling out the strategy. So as we say, that is their strategy. Deliver world-class, quality private schooling, the offering at lower fees, the how. So we have these elements as part of what? As part of their business model. And to head up the finance division. So from a context perspective, it seems that Denise is the founder and Ryan will then be probably the CFO or the finance director. The first school, which was the first school, high school only, opened in Johannesburg on 1 Jan 2021. So now we are getting a sense of how old this school is. So it's about what? It's about 10 years now. Hello guys, can you hear me?
Yes, we can, Renan.
Suddenly disconnected. Let me get back to it, sorry. Okay, I'm back. Can you hear me now?
Yes.
Thank you. Sorry about that. I just changed the network. I do not see anything. Let's just maybe try again. Yeah, because it's doing that red thing to show it's projecting. Are you sorted? Moses? All right. So as I was saying, they were just also bringing the context to say that, yes, they built the school, they were very proud of that. Then subsequently, they opened a primary school, again in Gauteng, but this time in Randburg, and another high school in Midrand. So today, we have 3 schools in operation, enrolling more than 1,000 learners. So 3 schools, and these are enrolling what? 1,000 learners. So as you can see, it's a very mid-sized or small. So it's small to mid-size in terms of what? In terms of if you want to just imagine how big of this school is. So we know some of the listed companies, when you look at the numbers for Curo, they are really overwhelming. They are really quite impressive. So this we can see that is still a far cry, but it gives you a context. And I think one of the things that I always appreciate about APC examiners is that they've got these elements to really attempt to calm one down. And if one was reading, their expectations say, don't be overwhelmed by the likes of Curo. We are still quite small, 3 schools and just under what? Just above 1,000 enrolled candidates. 2020 was a tough year for most, and we were not spared the consequences of the lockdown. All right, so this is very interesting. So one of the things that you will then see in this bubble or in this diagram here is that in a pursuit of building or developing the capital, there is the external environment to consider. That you cannot build it in your own legal factory and things just work out. But the environment or the external environment will have a big part or have a big impact on the effectiveness of your strategy, on the outcome of your strategy, on the resources that you can be able to access. So that is what has been introduced. And as I was saying, there is no way that the examiners can fall anywhere other than here. So if you are now looking at this picture, it's just a matter of piecing it together to say, where are the examiners? When they're telling me about COVID-19, what are they expecting me to think about? So they are expecting you to think about the impact of the external environment on the business. And if you check, it's outside, just showing that it will then impact the strategies that the company have put forth. So 2020 was a tough year for most, and we were not spared. And you know very well that as a school, or most of the schools were closed during the lockdown. So it's not that they were considered to be essential. So you will then expect that it could have been quite challenging. But at this point, I want you to then start thinking about challenges, and based on some of your general knowledge in terms of maybe seeing what your siblings had to then endure, what you also probably had to endure, and also maybe your children had to endure during this period. It was where then a lot of schools then migrated to online. And you might then be thinking that that is one thing that I will expect of this. And if they had to migrate to online, I might be thinking that there could have been an impact on what? There could have been an impact on their financial element. Did they have an online platform already, or did they have to make investments in an online platform? And one could also, again, think about financial capital, how it was impacted. It was impacted because a lot of companies closed down, a lot of jobs were lost. So it could have been that parents might have started struggling with payments, which again impacts your debtors book and the bad debts written off. So financial capital impacted again. And it could then also impact your outlook, that now you are entering into a different territory of online. And if you enter online, you might get new competitors, or the parents might just then be reluctant to even enroll in the online platform. So impact on enrollments. And again, that will impact what? That will impact your financial capital. And at this point, these are just then the things that you are being mindful of before you even get quite a lot of context. And how do you do so? How do you do so? You do so because you might have read widely, you might have heard, but the expectation is that you again are not sitting in your legal cubicle and just doing what the employer says, but you are engaging and developing professionally. So some of the things that I'm engaging you on, you might say, yes, this I had, this I might have had, and so on and so on. It was tough to navigate through the stop-start of schools closure and reopenings. Fortunately, we were already delivering 40% of our high school programs online prior to what? Prior to 2020, which is good. So this is good. So this could highlight what will be what I'll consider to be maybe a strength of this company. And because they might have had expertise and experience in launching online courses. So it means that maybe the work needed to just be done for the 60%. So we were well placed to continue with schooling, whether on site or remotely. Okay. I've attached some PowerPoint slides which outline our vision, strategy, as well as operational and financial performance. So we note it. And we also note that, again, in understanding a business, it is important to understand the purpose, which we have now outlined as what? Delivering world-class private schools at a lower fee. So now they're telling us about the vision and the values of the vision and the strategy of this company. We will use these slides for orientation purposes for new staff members and non-executive directors. It is also useful for planning purposes and those biannual strategy sessions. Enjoy the read. P.S. I'm going to involve you in more than just accounting, audit, and tax. I would like your assistance in driving new projects. We'll let you know more about this at a later point. So very limited number of triggers here, but what we've just gotten or taken away is that what is their purpose, how is their relative size, and what are the challenges that they had to recently face or continue to face, and what is something that set them apart. So these are the key takeaways from this message so far. All right. I'm just checking the chats. Just to confirm, can you guys see my screen? I see someone was saying they can see the screen.
Yes, we can. All
right, thank you. So now those were the key takeaways. Then the slides. So technology enabled learning, preparing learners for the future world of work. So one, we noted that technology enabled learning. So very intentional in the context of COVID-19 environment and the future ahead, to say that this, from a technology perspective, our learning is aligned. And the focus on future world of work. But we just noted nothing much we can do there. The contents is presented. I will normally encourage you to do a short analysis, but you will see that here they'd already done it for you. I will encourage you to do competitor analysis, but again, here they've done it for you. So they've done some of the work for you. But one of the things that I always encourage you to do is to exercise critical thinking. Critical thinking could be that there is someone who prepared this. Then you need to ask yourself, is there any reason to fully trust them? Will they have captured all the competitors? And will they have captured all the weaknesses that are evident from this case study? So you will always need to be mindful. So as you are going through this, you might need to be identifying some of those, but when you get to the end, you might then say, we are aligned, or this is new, I've noted, but I thought this will also be there, and start thinking about why it might not be there. Then starting off with the history, they talked about, again, Denise and her completing MBA. The dream came true when she opened that first high school in Jan 2011. So that's that. Then they opened a primary school, which we read about, and the one in Midrand. But we noted that if you check, this is a massive what? This is a massive project, it appears. First one, they opened the first one in 2011, that's good. The second one in 2012, so there was just a space of a year. Then 2014, that's just about 2 years later. Now we are sitting in 2021. They've not yet built another school. Do you notice that that could start talking to you somewhat about issues there? So you might want to question that, oh, are you happy, you guys, with that just 3 schools? Was this the intention? But it appeared as if they had already told us. Oh, no, I'm reading ahead. So what one needs to do is to just say, okay, I see 3 schools. Is this the plan? And are there plans to grow this? If they are plans, what could have stopped the company from 2014 up until 2021 with no new development? So the company operates on the following principle. The curriculum are structured to enable learners to learn at their own speed. Technology is used where possible in the classroom and online. Learners are encouraged to be curious, inquiring, and discerning. The learner is the focus and not the teacher. Data is that word. Let's leave it there. Information is useful. Knowledge is the goal. So the fancy stuff. And remember that some of these things, you are part of the team, so you just need to warm up to them. But now you are supposed to start having a mental picture of how this could work. So when I saw that they use technology in the classroom, I'm thinking that maybe they could be using tablets in them. There could be also in the instances where learners are at home, there could be those live classes or links that are shared, pre-recorded material. I could see some guided approaches to the learners so that they learn at their own speed, the Montessori kind of model, and so on. So now I'm here and I'm warming up. Then now they talk about the vision. So our vision is to have 10 schools open and running in selected provinces by year 2030. So they have now outlined that 3 is not the ultimate goal. They want to then have what? To have 7 more schools. So what will that require? That will require more capital. That will require them to really assess where the world is going to be. When they told you that they are planning 7 more schools, do you immediately think that that was appropriate in the context of COVID-19? Do you have a view, or what is your view in terms of how the education space will evolve over the next 10 years? And do you have questions to start or that are brewing at the back of your mind based on what they've told us? Then interestingly enough, when you look at bullet point number 2, They say to move to a fully online educational model, but with an on-campus attendance to allow learners from different backgrounds to share what? To share and learn from each other. So you might then start interrogating this to say that then is it a good idea to be building schools when one of your vision is to be fully online? One will then say that, yes, we see the point about this on-campus attendance, but does it require that you build your own school? That could be something that I might be thinking that I'll need to engage with Ryan on this, because Ryan is telling me that they want 10 schools in the next 10 years, or in the next 9 years. Noted, but we want to be fully online. Okay, so why do you want all these schools? Because we want to have this on-campus attendance. So have a view. Then the next thing is that they told us that it's to collaborate with similar global institutions to share best practices. Could that be that they're triggering that there could be an opportunity to partner with an international brand, and you might need to evaluate such a proposal? I wonder, to establish a private university by 2035, and to have a sustainable foundation providing 50% of all learners with bursaries by what? 2040. So now we have a view. And remember that, as I'm saying, the examiners want you to really be part of the organization. So if now I note my key takeaways from this, I might be saying that there might be conflicting objectives, building 7 schools versus what? Versus fully online educational model. Then this on-campus attendance, this is considered a key. I wonder why, right? So is it something that based on the experience, they find that this sharing and learning is so critical to the development of the candidates? So we noted that it's enough that they believe in it to say, let's build 10 schools over the next 7 years. Because as a board member, I will be quite surprised to say that, is this building of 7 schools justified to achieve this? Then collaboration with what? With similar global brands. I considered and wondering if there will be a task somewhere. A private university noted and a foundation noted. Then our core values, it's all about kindness to yourself and others. Respect. Yes. Yeah.
Sorry to interrupt. I just have a question there on slide 3.
Slide 3, sure.
Point number, I think second last point. The learner is the focus, not the teacher.
Oh, yes.
Yeah. For me, that, I don't know if I was just thinking as an employee, but to me, I wanted them to also care about the teacher.
Okay.
And the school. So.
Yeah, I'm listening.
Yeah, so I was just saying, for me, it didn't sit right well with me that, well, I kind of got what they were trying to say, but now are they saying they don't care about their employees?
Interesting point. Interesting point. And then going through some of the tasks, did it appear as if that's what they meant? Do you see something concerning?
I think I carried it through, but we'll see as we go.
Okay, but yeah, good point. Good point. Because as a teacher, you might be a bit worried to see, it's fine to say the learner is the focus and not the teacher might not be necessary. But here, they have been explicit to say the learner is the focus, not the teacher. Whereas this statement can stand on its own. Okay, so it could probably say something about what their attitude towards the teachers. Maybe they just see them as what? As a means to an end rather than a critical value add to the development of the learners. So good point. Then here, they talk about kindness to yourself and others, respect for others and for the environment, doing what is right and do no harm, be responsible for your actions and their outcomes, making learning stick, struggle until you understand, build positive relationship with your peers and make long life memories, and have fun. So this is a good setup for what? So this is always a good setup for an ethics task. So essentially, when you are now confronted with those gray areas, then the core values will lead you back to say, but this is your own view. And you are what? You are kind to others as well as to yourself. You respect others. So maybe how then the teachers engage the candidates or the learners, how the teachers engage with the parents, how management engages with the parent, we need to see these values coming out. Then we get to the financial, we get to the operational elements. So number of schools, they told us the primary school is one, the high school there are two, the middle one and the first one that was built in 2011. Then the number of learners, so let's now check carefully. So 2018, 1059, 2019, 119, and 1046 in 2020. So there is a slight drop, right? If you check, 2020 is the lowest out of the 3 years. So what other questions did you ask yourself about this? So this 1,000, is it a good number in relation to the 3 schools? In other words, one will want to know that as much as you have this, are you operating at a significant capacity, yes or no? So at this point, we don't know what is then the capacity of the 3 schools. It could be 1.2, in which case you are doing well. It could be 1.5, in which case this probably is relatively well. If it's 2,000, it could then be a problem. So we wonder whether this is an issue for the company so far. Then learner-teacher ratio is an interesting one as well. So we see that it's very, very low. And for a school that aims to be a low-fee school, this is a very interesting dynamic, because essentially what we are saying that they will need to have about 80 plus teachers in 2020. And in terms of overheads, that could be significant, because what we are saying is that we've got 1046 students. For every 12 students or learners, there is a teacher. So 1046 divided by 12 gives me around 87 on average. So that is where we are sitting. IEB metric results for the two high schools, very good. University exemptions, also good. We see that there are learners that achieve a very good average, being an A aggregate, and that's 8% of those schools. So, operationally speaking, this school sounds like a great school, right? So that will then be my takeaway. So there are no apparent concerns. So the pass rate is good. The university exemption is it's high. Yes, it did drop. I note that, but it's still at a what? It's still at a very interesting point. So, as I'm saying, no apparent consensus for me, other than what? Other than this ratio of teachers to learners that we are seeing here. Then, as we continue understanding the school at a glance, each school is incorporated as a company and is 100% owned by A. It produces its own set of AFs that are consolidated into the schools. The management of each school has the following roles. There's the head, deputy head, head of operations, and head of admin and IT. So again, we note it. Then next, we note the directors. So these are the directors. We've met Denise, we've met Ryan, and there's Google, who is the independent non-exec, and there's JK, who is also an independent non-exec, and Basil, who is the non-executive director, and this has then a stamp with details about this private equity fund, which owns 30% into the school, and therefore they've got a seat on the board of directors. Then Clive, it's independent as well. Professor Shelley, independent. So overall, we are noting that the board, in terms of what? In terms of independent, there is majority of directors that are independent, majority that are non-executive. So that is what? That is what we can take away. But of particular note, we are given a high level outline on the structure. The 30% is owned by a private equity fund. They further clarify that in addition to the private equity fund, Twaku, which is Dennis' trust, owns the majority shareholding, and Ryan owns 19%. So out of these directors, then 3 of them are also shareholders. They went into the detail. When it comes to the detail, they just then provided what? They provided context about the software system. And here you needed to read carefully because it will help you again to understand the business and to do what? To be able to think through some of the issues that will come later on. So the company uses an administration system and a learning management system developed by a global software group that specializes in education to perform functions that include 1, enabling a mass communication with learners and or parents via various channels. All right. This is SMS, emails, and social media. A platform that enables the online delivery of learning material. A learner record system that enables A to store and maintain learner records on amongst others, contact details, parent information, their IDs, bank information, and vehicle registrations. Very sensitive information there. Medical aid details, scanned documents, learner reports, and billing information. Automated billing of tuition fees and extras. Recording transactions in general ledger and various subledgers. These softwares are critical to enable A to keep accurate records in a cost-effective and efficient manner and to deliver online learning. Where possible, processes are automated. All schools operate a LAN, local area networks, on which software has been installed. So a couple of issues then are coming out from here. So one, we see quite a significant reliance on this software. We then get comfort that it is developed by a global software group that specializes in this. So we are concerned that that there is a significant reliance on this. Then we know, or we also note, that there is several personal information that is stored here. And with this personal information, we might be worried about cyber attacks. Because we've had a number of these institutions coming out and saying that they've been affected. So we worry about them because if there's a cyber attack, that could result in lawsuits, reputational damage, by key service providers or the parents. We also note that there is a significant automation and mostly around the billing of tuition fees. And we also use it to do what? We also use it to deliver the online learning. So as we are saying, we are picking up issues here. So at this point, there isn't much of a trigger to go and explore. One just needs to have a better understanding of the context. Then, number 7, isn't world-class private schooling synonymous with having small classes? Generally the case. Generally the case, I think maybe you are referring to what? To the 12 numbers there. Yeah, so generally the case. So that is one, but some of those schools that operate at those numbers, they charge proper fees to compensate for the additional overheads. So it's always interesting to see one that will say at a lower fee, a low fees, but world class. What do you mean? Isn't the ratio given? Am I not understanding your point?
So what I want to understand is that because it says learner-teacher ratio, isn't it already determined what the ratio is as opposed to going back to calculating it?
Oh, no. So we were just then saying that from a practical perspective, and I think maybe this is some additional work that one needs to do, to say that from this ratio, how does it compare to schools that are in the similar fee model? Are they also operating at a ratio of 12? Or are they operating at a more to say 20-1, for instance? And what I was then saying is that when you see this kind of ratio of 12-1 teacher, then the schools that I've seen out there, they normally are at higher, they will not consider themselves to be low fees. They will likely be at a higher ratio because they are saying that we've got more teachers to support your children, so we charge a bit more. So then this ratio of 12 sounds very good.
Yes.
Then
Okay.
the good, it's now a question of how does this compare with other schools in the same fee range?
So the 84 that you are referring to is not within this context,
No,
correct?
the 84 now is because this is the learner-teacher ratio, so it's the number of learners for one teacher. And if they then have 1046 learners, it means that they've got about 87 teachers.
Oh,
So,
yes, correct. Yeah,
yes.
so okay, same understanding. I thought you were saying that the students were higher, so I thought that
Oh,
was already given. Yeah,
oh, yes, okay.
yeah.
All right,
Okay, thanks.
sure. And maybe let me note it because I think it's worth it. So compare this learner, or did you compare? Maybe you guys have a view. Did anyone compare with schools within similar fee range? Did you find that schools within where A was operating at in terms of fee perspective, were they boasting about this kind of learner-teacher ratio? Anyone maybe who went that far?
I noticed a ratio of 18:1.
18:1.
Yeah.
So that is for which school?
I'm forgetting, must be Caro. I'm forgetting on the specific school.
All right. So I think, yeah, maybe then find out the name as well as the fee range. Sorry
to jump in, but yes, he's right. It's Curo. So there was an article that I read during exams where it was saying to actually optimize your profits. So schools like Curo actually are targeting 18. So in the beginning, when you're actually building a school, shareholders won't really optimize the dividends or the wealth from the school if they start at 12 or 13. So they'll get to a point whereby the school won't be able to attract any more, say, prospective students. And once you get to that level, your range of 18 to 20 is actually where you are profiting. So that's what I also read about it with regards to Curo. Thanks.
Yes, and you see what I was talking about, to say that the 12, it's a low number, which now requires more overheads, and that is a bit heavy. So one then wonders, how do you then make it up with your strategy of being a low fee school? And I know that Curo operates different models. They've got low fees and they've got what probably appears to be premium. So it's also just checking to see, is this 18:1 across the board, or is it then maybe to the premium ones, or is it also to the low fee ones? Because if it's to the low fee ones, then it means that this will then be likely be a heavy structure for this company. So that is probably where one will need to just do this kind of quick analysis and comparison to get a good perspective. But let's go and we'll note that for consideration.
Sorry, Brendan.
Yeah. Mm.
No, from my side, the way I look at it, and
Sure.
according to the, can you hear me?
Yes, 100%. I can hear you. Go for it.
Okay, from my side, the way I look at it, and from the analysis perspective, and look at the other companies, although they are big, the other schools, but so like there's an opportunity for us to, in terms of increasing learners without increasing our cost.
Good point as well. And I think that was the point where I was coming from, to say, where are we? Are we operating at under capacity or over capacity? And because that's always an interesting question, to say that, is this drive intended, or it could be that I had teachers that I had already appointed hoping for candidates or students or learners, but they didn't come. And therefore, that's why you are seeing this ratio to be high, to be low. And essentially, I'm also in the 18:1. It is just I don't have enough learners. And in that regard, then it will not surprise me if now we get, and they start talking about what? They start talking about, we are under pressure, we need to let go of some teachers, because they will then have indicated to me that we are targeting 18:1, but we are sitting at 12:1. And therefore, it's either we increase learners, which we might have struggled with, or we reduce teachers, which will then boost this ratio closer to 18. So that is how you need to think about that. So you're absolutely right. Okay, good. Then payment options, typical again, parents are allowed 2 options. They can do an upfront payment of annual tuition fees. They need to do this by 15 Jan. If they do, they get a settlement discount. So now we are saying that we might need to get into IFRS 15. So IFRS 15, what will then be the issue that you needed to think about here? Which part of IFRS 15 will be relevant in reading this payment structure? Which part of IFRS 15? Because we can agree this is revenue, right? Just to make sure we're all on the same page. And if it's revenue, then we are in IFRS 15. But based on what they're telling us now, what is the issue here? What is the issue? Which part of IFRS 15 is being addressed here?
Revenue received in advance.
But the fancy word in IFRS 15, it's got a special section. So firstly, let's talk about, we are in step number, yes, which step are you on? 1, 2, or 3, or 4? Let's get that right. So which step is being dealt with here? So I see CATO, transaction price, timing, performance, variable consideration, measurement. Not quite, or maybe someone talked to me. Maybe you might have a different point. I might not be seeing it at this point, because I've got a different one. I just want to see whether we are aligned. Someone to talk through their point. I see different points coming through. I see different points coming through. Anyone wants to talk through their point? an end revenue. Step number 5, upfront payment. So what is the issue? Who wants to talk to me about it? You can open your mic, please.
Rendani, from my side, I think the issue will be, for example, for option 1, when will you recognize the revenue? Because if you receive upfront payment, it doesn't necessarily mean you render the service the same time as the educational services is rendered throughout the year.
So are you suggesting that what type of performance obligation is this? So it's either a what or what? It's either a performance obligation, what or what?
Sorry, repeat your question.
So when we talk about recognition, we have to first establish whether it's a performance obligation, what or what?
Over time.
At a point in time. Is what? At a point in time, right? So are you suggesting that this is revenue recognized over time? And what is the evidence of that? When do you have revenue recognized over time? When do you have revenue recognized over time?
It would be if you meet one of the requirements of paragraph 35 in FS 15. The first being the customer simultaneously receives and consumes the benefit provided by the entity's performance as the entity performs, which I'm assuming this is what the person is alluding to. As then the lectures or the classes are given, that's when they get the benefit of the fees that they've paid. I'm assuming that's what the person was alluding to.
Oh, you are alluding to, right? Don't you want to own it? You don't want to own it. So what she's referring to, she's referring us to paragraph 35. Paragraph 35, we've got 3 requirements, A, B, and C. And then they say if any of those is met, then you've got a performance obligation satisfied over time. And then she then told us that we are then here under performance, under paragraph A, which says the customer simultaneous, and the customer in this case is the learner, simultaneously receives and consumes the benefits of the entity's performance. The performance being what? Being the delivery of the teaching services. So I'm in agreement. Well done. So I'm in agreement that this is a performance obligation over time. So if fees are paid in advance, therefore, what will we have? We will have a contract liability, being the ability to either return the fees or to deliver teaching services. Are we in agreement?
Yes.
Randan, sorry.
Yes. Okay.
I think before, yeah, I think you touched the point that I want to say. So, okay, my point is like, okay, are these fees refundable or not? I think that's the starting point for me, because they are treated differently if they are refundable or not.
Yes. So no, but and that's why I said it's either or. So it's either you will have being the obligation, so not the ability. So you can have the obligation to return the fees or the obligation to deliver the services.
Yes,
So,
yes, yes.
so let's say they are non-refundable. You cannot now say because they are non-refundable, I can recognize immediately. You still have an obligation to perform. So that will then result in this not being immediately recognized, even though the parent cannot demand the fees back.
No, I do agree.
All right, thank you. So that's issue number one. So you've nailed it. Thank you. What is issue number two? So this is not the only issue. What is issue number two? So this is one of the issue. I'm with you 100%. And this you are dealing with the measurement. So you are dealing with the recognition on top. Now, who can talk to me about the measurement? Who can talk to me about the measurement? So who wants to talk to me about the measurement? I see a comment, transaction price. Now talk to me about transaction price. What is the issue there? Determining the transaction price as there is an element of variable consideration. I see this variable consideration coming in. Oh, yes. So then talk to me about that. So this is very interesting. Oh, the settlement discount. So
Yes.
the settlement discount. The settlement discount. Yeah, now talk to me about this. I like the way you're thinking about it.
I think it's a when we're trying to determine then the transaction price, then it should not include the amounts that the company will not be recognizing as revenue, or they will not be, just want the correct term.
Because when we read the transaction price definition, this is the amount the entity expects to receive in exchange for what? In exchange for fulfilling the payment obligation.
Yeah.
So now the settlement discount, you are saying in determining the transaction price, will it be included or not? And maybe if you are to then give us the theory, when will it be included? And when will it not? So let's say now you are the accountant sitting there, right? And you are this financial manager. And I am, in this case, let's say I'm Ryan. And I say that I have just had 100 parents enrolling their learners or their children. They are enrolling on the 1st of Jan. So the moment they enroll, we issue them with an invoice. And we then recognize this invoice in our books. Now tell me, let's say the tuition is 30,000. And if they pay before the 15th, they'll get this, let's say 10% discount, so 3,000. What will then be your debit on the 1st of Jan then? Will it be debit, accounts receivable, credit this contract liability with 30,000 or with 27,000? And what will then be the factors that you will take in determining which of the two is the correct one? How will you think about it? So how will you then present this journal? Remember that was one of your tasks, not task, but one of your role, that you will oversee the recording of the journal, the transaction in the general ledger. So if a transaction comes to you, will you return it or will you approve it? So I've come and I've said, as your junior, and I've said that there is a receivable, SFP, 30,000 being the assumed tuition for the year, and contract liability because the parent has accepted the liability, and I raise an invoice of 30,000 to them. Is this right? Or are you saying that, no, this is so wrong, it should have been 27 if we assume a 10% discount? Then you are saying that Renani, take that journal back and correct it. It should be 27,000. Which of the two is correct here? Which of the two? So I see a comment. It means the consideration is variable. Therefore, the amount recognized will be the amount that the entity will actually earn over the period. So at the time they will get the money with the discount, then they recognize the contract liability and the cash. You will recognize based on past experience how many people pay early.
Yeah, shouldn't we also raise a provision of possible settlement discounts based on the previous discounts we've provided to the parents?
So are you suggesting a third option or one of this option?
A third option, I think.
Which is it an allowance for discount or discount provision kind of?
Yeah.
Interesting. So you want this?
Yes, I think.
All right, let me just number them. This is option 1. Who is on option 1 and who's on option 2, 3, and so on? I just want to see the views in the room. Are we on option 1, 2, or 3? It depends on the expectation. So what is highly probable? So option 3, option 2, option 3, 2, 3, 3. Okay, I see most people love the new option. All right. So the standard then says, when can you include a variable consideration in the transaction price? What does the guidance say? What does the guidance say in that fancy language?
Rendani, without quoting that fancy language, isn't it where it says that when the transaction is not highly probable that there will be a reverse in the discount at the time in which the event occurs?
Yes, it uses that. So it calls it the constraining variable consideration, to say that the constraining element of the variable consideration, to say that you need to assess whether there will be a significant reversal when this uncertainty is resolved on the 15th of January. If the answer is no, there will not be a significant reversal, then option 1 is what you go with. So if there is not going to be a significant reversal, this is option 1. Then option 2 will then be what? Option 2 will then be when you expect there to be a significant reversal. Significant reversal when the uncertainty is resolved, right? And then when it comes to then what is more appropriate in the two, the only thing that is then different here, it is the receivable amount, right? So then that is what you will then need to what? You will then need to question, to say that now the receivable, yeah.
I think I just have a question on that, the option 3, ne?
Mm-hmm.
Are we not, for example, on the contract liability, is that not the part where we are obligated to perform?
Mm-hmm.
And then we're only going to receive, or bank would be then the 27,000. I don't know. The way I'm looking at it, those amounts should have been the other way around.
And so remember, we are still at a point of 1 Jan. The parent just enrolled the student.
So they haven't made a payment.
They have not made a payment. You are saying that parent, if you settle before the 15th, then you will pay only 27. But if you settle after the 15th, you will pay the 30.
So now, if there's a discount, does that mean we only give tuition that's worth 27,000, or is it still worth 30,000?
So that is then where you come back to if it's 15 and say, what is the amount that you are expecting to receive if someone pays early? And if someone pays early, it means you will expect to receive 27. And therefore, if it's 15, we'll say recognize 27 as your revenue. Makes sense?
I'll think about it.
Yes. So the point here is that you are saying that I am here about to recognize this transaction, and I've got an invoice that I've issued for 30,000. But if I receive this invoice by 15 Jan, then what will happen is that I will give you a discount of 10%, meaning that I will receive only 27,000 from you, and you will have fully settled your tuition for the year. But if you don't, then I will expect you to pay me the 30,000 over the next couple of months. How many? Over the next 12 months in this case. Does that make sense? So that is where we are saying to say that, so on which date is this? The 1st of Jan. So yes, I've clarified. So this is the 1st of Jan. How do we know that they've not paid? Some could have paid on enroll. No, but we are talking about the one that have paid. It's simple, because someone who is paid on 1 Jan, you don't need to worry. You are just going to say debit bank, and that person will just pay 27. So there is no issue there. Do you agree? There is no issue that one will be worried about. So the issue that I wanted you to think about is the one where only an invoice has been raised at the time of what? At the time or at 1 Jan, before they have even settled on 15 Jan.
How do you account for it?
Because if, yeah.
How do you account for the discount there on 1 Jan if it's paid right there and then? Because right now you're only recognizing the 27,000. What about the discount amount?
So the discounts will never see the books because you are getting 27,000 in the bank, so the bank is sorted. And revenue is saying that is the amount you expect to receive. And when you give a discount, you don't expect to receive the 3,000. So your revenue is only 27,000. So there is no discount recognized in the books. Okay. So makes sense.
Sorry. Hi, Rendani. Sorry, maybe I can just jump in. So when they pay, do we not credit the contract liability still because the obligation still remains from our side?
So when they do what?
So when they make so on the 1st of Jan, they make the payment obviously to take advantage of the discount.
Oh,
so,
yes. Oh, yes. Sorry.
Okay.
Yes, I'm with you. Sorry, I'm with you. Yeah, you're right. Yes.
Oh, sorry, Rendani. With that being said, because I can see the credit leg is a contractual liability. So when it comes to the other side where this thing is non-refundable, do we still raise a contractual liability?
Yes, so the contract liability represents a situation where you've received consideration before performance. So if you check the definition of contract liability, that's what they have.
So will I be wrong? Maybe somewhere, somehow, if I sort of put like, I don't know, I'm just asking because somewhere, somehow, like maybe I put other income because I'm definitely sure that's my money now. The only thing I have to do is just the service.
Yeah, but you have not serviced, you have not fulfilled the performance obligation. Remember the standard, its performance obligation is satisfied. You have not performed.
Yes.
So you can't recognize revenue.
No, I'm not recognizing revenue per se, because I know whether I perform or not, that amount, or whether this person cancels or not, I have to recognize that amount. Will I be wrong if I recognize it as like other income, sort of?
But now in the context of COVID-19, if you go down, you have to pay me my money back, right? Because you will not have given me a service. The law will say that your right was to keep to deliver a service. But now, because you are closing because of COVID-19, you are not giving a service anymore. Give the person their money back. Makes sense, because there is still an obligation. It's not like you give me the money and I disappear. I have an obligation in law, and you can enforce this contract to say, but I paid so that my child can go to school. My child is not going to school anymore. I want my money back.
No, I hear you. The reason why I'm asking this thing, because here it's fine. Maybe more information will be given on the day. Like if you go further on this case study, you will find out that more more parents like are changing their children to other schools and what. So I'm asking, like, let's take for instance, I've paid upfront, but I see which and like Akigos is charging me more. I have this other school of which they are offering more of the same benefits here, of which is the service, but the benefits are more less the same. But they have already paid an upfront payment, of which is like non-refundable.
Yeah, but that will be a termination of a contract, and it's addressed, I think, in paragraph 10, where now if consideration is received and the contract is cancelled, then I can recognize revenue.
Okay, no, thanks.
Because one, I don't have an obligation to pay you back, and because now you are gone with your child, I don't have an obligation to deliver a service to you. So that in that case, I can recognize the amount you've paid immediately as revenue. I no longer have any obligation.
Okay, no, thanks.
Sure.
Hi everybody.
Hi.
So I'm struggling to see how those options that you gave us fit in, because the scenario says that if they pay in advance, right, then they'll get a discount.
Yes.
But if they pay monthly, then they pay the full amount without the discount. So
yes.
let's say just to use the same numbers that you're using. Let's say the monthly school fee is 3,000 rand. Right? If they paid in advance on the 1st of January, would recognize the first journal that you wrote, that you put there. And then
yes.
if they didn't pay, then that means they are taking the option of paying regularly, right?
But
in
yes.
advance.
But remember that at that point we don't know, because they still have 15 days to change their mind or to get the money.
Oh, okay.
So now we are saying that between the 1st and the 15th, should this journal entry be like this? should it be like this or should it be like this? That's what we are talking about. Is that clear?
Yes.
Yes. So is that period of 15 days. So now, okay, maybe go.
Okay, so in that period between the 1st and the 15th, I don't see how they are, they then have a receivable because they haven't even started, maybe the schools, the children haven't even started attending yet. Maybe the schools only opened on the 15th.
Okay, so you are arguing the debit of receivable.
I'm actually arguing both. Like, what gives you the right to actually, the right and the obligation? So you haven't served anything, so you're not entitled to any money. Because if you're then saying it's a receivable, you're implying that you are then entitled to the money.
Yes, I'm with you. So that will then depend on the terms of the contract, right? To say that the moment you enroll, some will say that you need to give us a notice of 3 months, you need to give us a notice of a month. And if you then want to go into that like technicality, it means that only maybe for the next 3 months will be the one that is unconditionally entitled to, and that will then be revenue. That will be a receivable, right? Is that what you say?
Yes.
Yes. So if we go into that technicality, then the terms of that learner-parent school agreement will then determine which portion is the receivable there.
Sorry, Rendan, to come in.
Okay.
Yeah, I think maybe I can't pronounce is Angela or what, I can't pronounce her name. Sorry for that one. I think she's arguing the fact that we are raising a transaction on the 1st of January, of which, okay, fine, I do agree with her that because there's no transaction on the 1st of January, it's only up until the 15th.
Oh, no, but on the January, that's when you enroll the learner.
Yes, we do, but there we don't have any transaction. We're just saying it's okay if you pay up until this date. I think the transaction will only incur, according to my understanding, up until the 15th. That's when I will start doing these channels. I don't know, maybe if like I'm getting this thing wrong.
But remember that if 15 works on contracts, and when at contract inception, you account for the contract.
Maybe this can help, Brendani. Paragraph 108, it says a receivable is an entity's right to consideration that is unconditional. And then a right to consideration is unconditional if only the passage of time is required before the payment of that consideration is due. So then it would be the passage of time that would be the issue here between the 1 and the 15th, which then would not render the receivable as an issue.
Yes, and that was what the other comment was trying to do, to say that, but then what is the unconditional? Because if I can get out from the learner agreement contract, then there's not that unconditional. But I said that will be just going into too much detail. And if those details are there, you might argue them. But generally, the idea is that the moment you enroll your child into a school, you will be issued with an entire year's invoice. That's how generally the schools work.
I'm in agreement with you, Rendan. I'm in agreement with you. I was just trying to.
Yes, and I agree. I'm aligned with you. Yes.
Yeah, it also says, for example, an entity would recognize a receivable if it has a present right to payment, even though that amount may be subject to a refund in the future. That's what 108 further says. So it would be correct to raise that receivable.
Yes. And maybe for people that are not aligned, are you saying we should not do anything at all? Because that will be absolutely wrong. Okay, but
I'm not.
Asen will unpack it even more when it deals with.
Sorry, Renani, just going to quiet.
Rendani, you're on mute.
Thank you. All right. Wait. All right. So, yeah, we have discussed this, but what is the other element? So the settlement discount is one element. What is the other element? I think it was noted as the significant financing component. Did you also consider that as well? Am I still on mute?
No, I think we just apply the practical expedient.
Yeah. Short term. Yeah.
So you'll apply the practical expedient. Why is it applicable?
Because I think a year is like 12 months.
So let's say this entity says that A elected not to apply the practical expedient. What will you do?
No, I'll go with their police.
Yeah, but they just told you this. So what do you do? How will this entry look like? Let's say that the amount is paid in advance.
I think I'll just need to do that NPV calculation there, just to take into account the time value of mine. I don't know if they apply the practical, like they don't apply it.
Yes, so will that have complicated your life? Is that what you're saying?
Come again?
Will that have complicated your life if the entity has said, we are recognized that there's a practical expedient in IFRS 15, we don't use that, we don't apply it or elect it. On the day I ran away, yo, this is the problem. What do you mean you ran away? Kettle?
No, I'm saying like such situations, I wouldn't have thought of going this further. And if it happens on the day, this is when I literally will just blank out, you know.
Okay, but let's talk so that you don't find yourself there. So you get them, you know there's a practical expedient. The examiners felt that they needed to be funny, and they say that no, we are not using the practical expedient. How will these journal entries look like?
Isn't it we need to get the interest portion, Rendani?
So what will be my next entry? Debits and credits, yeah.
You can credit your, I would say you can debit your contract liability. Yeah.
Debit my contract liability, all right. Yeah, and then?
And maybe have like a deferred interest or something.
Interest accrual.
Then I have finance charges in P&L. Credit what? credit revenue. Do you agree?
Mm-mm.
You don't agree?
Is that journal on the 1st? If it's on the 1st of January, you don't agree. But if it's at the end of the month, yeah.
Yes, remember that we are saying
Won't
that
I be
first they pay.
receiving interest?
Won't
we be receiving the interest?
No, but remember that we are the one getting a loan.
Oh, okay.
You see, I borrowed from you as a parent, and instead of receiving your money later, you gave me your money earlier.
Oh, okay.
Agreed?
Yes.
Yes.
I also think that the contract liability wouldn't have been recorded as 27,000.
Sorry?
So, you would have recognized the contract liability at present value, isn't it?
Yes. So now, what will be then the interest to use, the interest rate to use to accrue for this? What will be the interest rate to use? What is the discount rate? Remember, we're not going to have more bank, because remember that the customer or the parent is paid in advance. They are not going to pay anymore. So they will only have one bank of 27. And then over time, we recognize the revenue over time. And the contract liability, what will happen? The contract liability will then be reversed over the next 12 months. And the finance charges will then be based at a what? At a discount rate. And this discount rate, what will it represent? Will it be the discount rate of the entity or the parent? Which discount rate will we use?
Okay, sorry.
Mm-hmm.
I feel like we should use the entity, because if we were to use the parent, like we have to adjust a lot of things, because these schools, there seems to be like a standalone schools, they'll have their own rates, they have their own borrowing rates.
So it sounds like you are choosing based on preference or simplicity of complying with IFRS. Is that the case?
Yeah, because I'm looking at us, like for us, like maybe the middle school, what's our borrowing rate if we were to borrow something?
But then is that in line with the standards requirements? What does the standard say?
I'm quite not sure, because this one is like in most cases this I feel like the standard is quiet when it comes to this thing where you can apply practical experience.
I know it's not. It's actually, it provides guidance on the discount rate.
Okay, maybe you can take us through that one.
I don't know if you guys can hear me.
Yes.
Yeah. The rate that must be used must reflect the credit characteristics of the party receiving financing in the contract.
100%. Which paragraph? Maybe you can provide guidance to everyone. Which paragraph is that?
It's a paragraph 64.
Thank you very much. Agreed. And the entity receiving the finance, do you agree that it's the school? Because you are providing it finance since you are paying in advance. So it is not a matter of convenience, but rather the party receiving the funding. Are we all clear? Okay, so these are the issues that are coming from here. So these are the issues coming from here. So we dealt with recognition, measurement, settlement, discount, as well as what? As well as significant financing component. Then we go to what? We go to the summarized information. So we now change gear. Remember, we've been soft like on strategy, understanding the business. They introduce some accounting issues, and this is the kind of research that or work that one will have needed to do just to make sure that they're comfortable. And then come to what? Come to summarized financial information. So we see that 2019 and 2020, they are audited financial statements. Then they've got tuition, 1548. So we note that, but the impact of COVID was not significant. Do you see? Because when we read the introduction, I thought it was very bad. Remember, they said that what? If we recall, 2020 was a tough year for most, and we were not spared. So I thought that there would have been a significant decline, but we know that it was 50, and now it's just 48.9, which is like 49 million. So, I mean, it's just like a loss of R1 million. Then the entrance fees. Then we've got what? We've got 97 and 114. So the entrance fees, what do they highlight? Generally, entrance fees are paid when a learner is coming for the first time. And if that is what it means here as well, yes, there could have been fewer new enrollments, and that's why we saw a decrease in that. Total revenue, we see it. Operating expense. Now, this is where now we are saying, so do you see? But school is equivalent to butter, to bread here. Okay. So this is now where things get interesting. So they said they had a problem with COVID-19 or they were not spared. But when we looked at revenue, this was not apparent to us. But now when we look at cost, do you see that there is an issue here? So cost in 2019 were 41, and now costs are 49. We see what is then the biggest driver? What is the biggest driver? So that's like a difference of 8, right? So we are looking to say, where does 8 come from? So 8, do you see where the first part comes from? Do you remember what I was saying about the parents losing what? Their jobs and so on. So do you believe this? Like, is this believable in terms of what you understand about schools? So we've got bad debts increasing by about 2.5 million. Employee costs, we see it decreasing. Impairments, they pick up by 5 from 0 to 5.5. And other operating expenses by about 2 million. So we are now saying that those are the issues. But is this expected? So bad debts, is this expected? One could say yes. Employee costs, is this expected? Probably. Does it mean they let go of some stuff? Or probably bonuses were not paid because it's not so significant. Were not paid. And then impairments. This is new. We are told that this is what? impairment of land and buildings. Yes, so as well as salary cuts, someone suggested this. Okay, thank you, I agree. And then impairments, so why would there be an impairment of land and the building? So was this surprising to you? Was this surprising? Or did you have views on why this would be the case?
Isn't it now that it's locked down, started, they are no longer coming to use, so the buildings are no longer in use to generate the income.
So, and that's an interesting point. So is it not even more confusing for you that they were saying that they want to build 7 more schools over the next 10 years? Do you see, so, do you see the problem that is tricky here? Because you're telling me you're going to build 10 schools over the next 10 years, but you locked down, and now you're telling me that you lost 5.5 million because of such a lockdown. So it could be that. So it could be because of the decline in the value as a result of COVID-19. So, but were you not impressed though about the resilience? The resilience of the top line performance. Because under COVID-19, I thought this was noteworthy. That I expected a much bigger decline, but that's not the case. Okay. Any other key takeaways from this? Anything else that you noted?
The movement in operating cost.
The movement in operating cost. Did I hear you right? Because that will be the breakdown will be the analysis of these elements that we're looking at. Because this seems to be the drivers.
Yeah, no, it's not.
All right. So now we have a picture now that the performance of the entity was not strong. EBITDA declined from 9 million to about 200,000. That's big. We see bad debts spiked and impairments spiked. And maybe where now one is sitting will then be wondering whether these are just once-off phenomena. Then continuing, we see depreciation and getting EBIT with 2.8 loss in 2020 and 6 million in 2019. Interest income surprisingly didn't move. Finance charges, they're a bit lower. And we can see that we made a huge loss of 6,425. Deferred tax as well as what? Current tax are provided, and we note it, and this is expected. It seems, however, that maybe in 2019, one will say, I expected tax to be paid, so tax has not been paid. In 2020, I see a loss, so not paying current tax makes sense. So we note it. Then come slide 14. Slide 14, remember that this is a school with 2 or 3 buildings. So we then say that 1, we've got land and buildings. So land and buildings, it was 62 and 55. Then one will then think that this is both depreciation and that huge impairment. Furniture and fittings, there was an increase. Could it be this is an increase due to online IT infrastructure? Intangible assets, they've gone down. Right of use assets, they've gone down. Deferred tax, they've gone down. They've gone up, but they are on the asset side. Receivables, they've gone up, indicating that pressure that we saw on the bad debts being written off. Cash, it has remained constant, and that's why probably we saw interest income remaining fairly constant. And we also note the capital employed. We got share capital, no new share issue was undertaken. Retained income decreased because of that loss. The liabilities, other financial liabilities have gone up. Lease liabilities, they were paid off, and deferred tax liability increased. Then they clarified that other financial liabilities comprise of a loan, shareholder loan, from the private equity and a long-term loan from DBSA. Now, when you look at this company, you might just want to check. So it still has positive equity, which is encouraging. And therefore, the solvency is still positive. So yes, there could have been an increase in gearing, but overall, we see that it's still positive equity. Then they gave us a breakdown of the current assets, trade receivables, trade payables. We see that they're managing them.
Linda?
Yes.
Sorry to disturb. I just wanted to find out. Again, we are in the 2021 financial year, right? And we're not given the draft accounts for 2021. So why should I say why would SAICA want us to compare 2019 and 2020? Should we just assume that in 2021 everything will be also going down, or because I don't see why we should focus on 2019 and 2020. Maybe 2020 and 21 would have made sense for me. Why should we go back?
But it depends on the purpose, would you not say? So are you saying that maybe in 2021, the performance might have been better so you are coming from a perspective of 2021 because it's still currently running and the performance there will have then been easier to talk to and just understand the state of affairs compared to 2020 or something else. Yeah. I just want to understand the issues. Yeah.
Yes, because as for me, I think I'll go in the exam with the mindset of, let's say Archigos is not performing well based on what I would have researched or what they would have provided me during the pre-release. So I'm not sure which head I should weigh, like just to be neutral, like you never know if the financials will improve or.
Yeah, but that's a fair comment. Like what you're saying is a fair comment. To say that we don't have at this point management accounts, right? And you are saying that if we don't have the management accounts, I really don't know whether this situation has improved or not.
Yes.
Did it give you consent though? Because I hear where you're coming from.
Maybe it's just a matter of the mindset, because I'll be just thinking with articles, everything is not going well from what I would have like analyzed and researched from what they would have provided. So
yeah, and that's fair. That's fair. That is fair.
Okay.
Yeah, that I hear where you're coming from. Because they are giving us the state of affairs as at end of, yeah, even now it sounds like a distant 2020. Last year could have been much better, and all these things that we are worried about could have improved or deteriorated further. So very fair. And it would have been an interesting one if maybe they say, we finalized the preparation of management accounts, this is the state of affairs, let's talk. It would have been a good approach to just prepare yourself for such.
Oh, okay, thank you.
Yeah, sure. Then continuing, we note, yeah, so the loan, there wasn't much to take away from the current liabilities, not much has moved. And they told us that the change was also due to this short-term portion of the DBSA loan. Now, which is an interesting one, you've got two loans here, the shareholders loan as well as the DBSA loan. Then the shareholders loan, they were told that it is repayable out of surplus cash that A schools generates annually. And in the past, the private equity has funded any shortfalls in the financial year. The loan is at what? At a rate of 10%, and no dividends are to be paid to shareholders until such time as the shareholders' loan has been repaid in full. Now tell me, if then they had just asked you if this loan is equity or a liability, what would you have said? Is this a liability or an equity instrument? Because they are saying that you pay only when you have surplus funds. So is this a liability or is this a liability or is this an equity instrument?
I think it is both, Rendani.
Talk to me. Why?
Because we don't have the obligation, like it's not clear that we have to pay this amount every time. So I wouldn't say that it's a straight liability. And then at the same time, I'm thinking maybe they can convert it into shares.
Okay, but wait, is that a term or is that, are you talking in the capacity of just being a shareholder?
Sure, I'm still thinking.
Okay. Anyone to assist?
Okay, René, according to my understanding, it becomes a liability if these loans are payable on demand. Although maybe they can structure it like this way as it's structured. But I don't know if I read somewhere where it says if it's not structured, it's a liability. but I can't recall. I can't refer you to that. Maybe article or reports. So it needs to be like sort of structured so we can determine that if it's equity. But if it's not, it seems like this thing can be paid on like on demand, sort of.
Okay, so where are you leaning? Liability or not?
I'm going with the liability.
Okay. What happens if there's no surplus? I see a question. Yeah, if there's no surplus, does it mean that it becomes equity?
It's still a liability. They can't pay it.
Agreed. So remember that the liability, it's a liability if there's no unconditional right to avoid. So they will need to pay it. The issue of timing does not change the obligation. It just impacts the measurement thereof. But if I say that you will pay me in future, so that future could be tomorrow, it could be in a year's time, 100 years' time, and so on. So yes, there will be a liability, but the measurement might be difficult or might result in a very low figure. Okay. Then let's quickly wrap it up. Did I promise that you guys will leave at 9? I see 8. Let's quickly wrap it up. So then the competitors, I thought they were very generous here. The examination committee, they gave you Curo.
Sorry, Rendani.
Yes.
Yeah. So will I be wrong then to look at both liability and the equity component, or there's no indication in this case?
And that would not be correct, because the core thing, it's the obligation's existence. And it sounded as if you are saying that you are focusing on the timing. So the timing will affect the measurement, but the recognition will need to come first, and this is a liability. You have to pay it.
Oh, okay.
Yes. So the fact that you have to pay it when you've got enough profits, it doesn't matter, you have to pay it.
Sorry, while we're still on those loans, I just want to know, did I go too far to try and determine how the increase, because there was an increase in the liabilities. So I wanted to find out this increase, was it due to loans from shareholder? Because I was believing that this company is struggling, so the shareholders probably keep on pumping money, you know. So did I go too far to try and figure out why what increases the liability? Because what I realized is the shareholder, sorry, that 20 million from the department never changed. So the only increase could be either the increase in lease liabilities, or maybe the shareholder keep on pumping money to assist with the cash flow.
Yeah. So to take that view will not have been going too far, because it will likely be the case, given that they've made losses and they've just told us that in the past they have provided for any cash shortfall. So it will not have, but one will then need to consider that. But I also noted that the cash and cash equivalents did not change. And it could have been a situation that maybe there was a decline, and it could have been that there was an agreement that let's maintain it back to 1720, and that's when the loans came in. So that view, it will not be far-fetched.
Okay, thank you. Because I was just trying to figure out how, I mean, I felt like this company was highly geared, but I wanted to see what is highly geared, who has more funds, who provided the funds, you know, so that if they have more funds from shareholder, it wouldn't be much risk, because I mean, they can, if there isn't terms that are very strict from the shareholders, it's much better than from the outsiders. So my point, I was coming from now, they want to plan and build more schools and all stuff. Would they be able to do that if they're struggling financially?
Which is a good point as well. And that is a valid concern, and I'll say keep it still. But in terms of just the funding, one will see that the share capital did not change, so there was no direct equity, and the shareholder loans may have been may have increased. So that seems to be the most feasible thing in this case, because the lease liabilities, there was a small increase, not an increase, rather. It is more of a decrease because this is an installment for next year. Yeah, so there will have been some new liabilities, and yes, there is an issue of solvency or gearing because the equity has dramatically decreased because of the loss we made in the current year. So there is a threat to the company's ability to achieve its strategy of building more schools. That's very fair. All right. Then they gave us Curo, 53,000 is the average tuition. Advertech, the average tuition, it's 74,000. Interesting. Did you attempt to calculate the average fee for this school? Because we have the number of learners and revenues, right? What was the average fee that you got to?
46,844.
Yes. So it's, do you see when they claim that they're a low fee school, it's validated? Because Curo is sitting at 53 and Advertech is sitting at 75 or 74. So they sit at 46. It's still high, but for a private school, it appeared cheaper.
Rendan? So for me, that was a contradiction, because what's low school? Because I mean, unless we're saying 46 is a number which is viable or applicable for that term, because for me, I would be looking at maybe in the 30s to try and, especially if you're a school that is trying to attract prospective parents who are in the market but can't really afford your Curos and your Advitech for those average fees. A low fee for me, that was too high. I don't know if anyone else thought that. Thanks.
Yeah, I've seen one school, Amberfield College. I used to, one of the things that attracted me about its ad, they always say that their fees are on average lower than neighboring private schools. Then when I went there, I got a shock because they were worth 48,000 for they were about 44,000 for a grade R, and I was like, oh, is this cheaper? So it seems it is, because when you compare with the average private schools in the area, they were the cheapest or closest to it was 48, 52, somewhere there. So, and I think that the low fee here is contextualized to say it does not mean that it's cheap like that. It just means that it's cheaper than some of the neighboring or surrounding brands. Because some parents may say, I'm choosing Curo or I'm choosing this school because it's 46 and it's about 10,000 cheaper than Curo. Does that make sense? And when you look at Sparks, I mean, Spark is one where I've heard, I've not confirmed these prices, but I've heard that it's, when it says it's cheaper, it lives up to that promise.
You see, for me, the 25 is a low amount.
I know
if they said if they said medium fee school, because I see some of the comments which are saying that it's in the area and the public schools, but you're trying to advertise yourself and attract parents. Where Spark schools cut through the market by supplying quality education or comparatively IEB education, and they were still charging a relatively low amount, which could then attract the students or the parents, and it can live up to the strategy, because here we're trying to open up 7 schools. So are our fees competitive enough to actually open up those schools? And I think then we're contradicting our own strategy or future strategy. Thanks.
Good. So worth noting. So compared to Spark, our fees are relatively higher. And therefore, questions the objective of private education at lower fees. Especially because they've included this as a competitor. So it's not like you found this and you are now comparing. They are saying this is our competitor, and now you are saying that, but yeah, compared to Spark, your fees are relatively high. So that is a noteworthy point. I agree. So the context given here, you can see that the schools are much bigger. I mean, Curo 60,000, Advertech 32, Sparks 10,000 learners. Then they gave you what? The strengths, the weaknesses, and the opportunities. So I think most of the ones that we saw here were quite self-explanatory. That yes, we've embraced online learning ahead of COVID-19. We read about that and we consider that to be a positive. The software system is cost-effective and operationally excellent, maybe because of the global software manufacturer who specializes in this. We have the best teachers. Our academic results are outstanding. We saw them 100% and also bachelors. Independence in admission of learners, hiring of staff, and academic. So this is probably in comparison to public schools. And strong board of directors. So most of the things here were what? Were quite self-explanatory. So
Brandane?
Yeah.
Sorry, just on this SWOT analysis, maybe like I wanted to ask if we were to get a question where maybe they say review or maybe prepare a SWOT analysis, is this sufficient? Like if I can just say we have best teachers, our academic results, or maybe it's this thing because it's like in a format of slides, I don't know, but is this sufficient? Can I just say maybe if I were to prepare a SWOT, say we have the best teachers, our academic results are outstanding. I don't know.
Yeah, so, and I like your point that these are just slides. And for slides, this might be appropriate. And if it's probably a task, I will imagine that they might say include some talking points or presenter notes to the slides so that maybe you can expand a bit more on it.
Okay.
Yeah.
But let's say if it's not slides, then where to say strength, then I just write them like this.
No. So that will be, for me, my first response will be it's light. It'll be very light. Like you see that point about the software systems. Like if you tell me that's cost effective, agile, and operationally excellent, I'll say, how do you know? Why? But then if you say because it is developed by a global software producer who specializes in education, then now that's clearly a strength. And that would be a well-explained point.
Okay, no, thanks.
Yeah. But yeah, good question there. Okay. Yeah, so I think then we can pack it then. But do we have a better sense of the company? So one, just to say that if we go back and we are saying that, yeah, do we have a good sense of how the company looks like? So financially speaking, we are saying that we saw where it is from a pricing perspective. So those issues or the discomfort that you're talking about, that I don't think it's cheap or cheaper and so on, you will be under the financial bubble. And then when you were analyzing the cost, you are under the financial bubble. Right? Seeing that the revenue was not significantly impacted, still under the financial bubble. Talking about liquidity, you are still there. Then manufactured capital, that's now your school, land and buildings. You are planning to build 7 schools. That means you plan to increase your manufactured capital. And additionally, we saw an impairment of land, which might mean that either you bought land in an attractive area or it's due to COVID-19. So those are the issues sitting there. Intellectual, we saw that there were some intangibles, but we didn't get to see any expansion or details on them. So we put probably a question mark to say, maybe they could tell us more about those things. Human capital, we are told that the board is so strong. They are represented, the board is independent. There's a representative from a private equity fund, and we've got the founder still be part of the management team. So human capital, and they also mentioned that they've got some of the best teachers. So it's just those things being connected. But do you see how then you use this at the end to capture your thoughts in a clear way to say, have I thought about the different elements of the business? Makes sense?
Yes. It
Okay.
makes sense.
So let's then keep it here for the evening. So we're going to work with this understanding now. And when you look at the reflection videos, you will then have this context. So I'll want you to be aligned. I'll want you to be practical. And remember, you work for this particular company. So that will be all for tonight. Thank you very much.
Thank you, Rendani. Hi, Rendani.
Hi.
Is it possible for you to share the document you were working on today with us?
Oh, okay. Yes, I'll ask the team to upload. Yes, we'll do.
All right. Thank you so much.
Thank you, Redani.